Now, for more on the U.S. economy, I'm joined by William Black. He's an associate professor of economics and law at the University of Missouri, Kansas City. Thank you for joining us.
Thank you.
As we saw today, a much more cautious tone from Yellen about U.S. growth and the global economy. Interest rates are still very low, and now the Fed isn't sure about raising rates again. What options does the Fed have if the economy worsens?
It essentially has no options other than to junk the plan to increase rates. What you need if things worsen is fiscal policy. And the very fact that you don't even hear those words used tells you how screwed up things have become globally in terms of how we approach economics.
Now, there was a mention of the possibility of introducing negative interest rates. Tell us more about that.
In negative interest rates, it's actually a bit like what it sounds. You pay the bank to loan them money, which is a rather strange phenomenon. The theory, as explained, is kind of explained, I think it's incoherent, in Japan is this theory that the banks simply don't want to loan money, and if we start charging them to deposit money with the Bank of Japan, they'll suddenly start lending to folks. But banks want to loan money. That's how they make money. So when banks aren't lending, it almost always means there isn't very much demand by businesses to get funds, and that usually happens because they don't think they can sell their products. So the answer is to deal with that demand, and monetary policy is very bad at that when you get into these kinds of situations where the interest rates are already zero, or actually, as you said, negative. And you ought to be using fiscal policy, but Europe is caught up in this austerity madness. Japan has gone to it as well. The United States has been on an austerity kick for the last 3 years. And in addition to the concerns that your earlier report talked about, European banks are getting hammered left, right, and center. In particular, investment banks are getting hammered. Deutsche Bank had a recovery today, but was trading at below 1/3 of book value. That means that the investors think its assets aren't worth anywhere near as much as Deutsche Bank is claiming they're worth. And Deutsche Bank faces increased capital requirements that it couldn't meet internally. In other words, it's going to have to raise capital.
Now,
so
William,
what you're seeing is an old-fashioned flight to quality.
Now, in terms of some of these concerns, and Yellen also mentioned that there were fears about the possibility of a recession, but she hadn't seen enough of a sharp drop in growth to support that. What do you think?
Well, it's clearly a risk, and she's right. We haven't seen the reduction in growth rates yet in the United States. We had 1 quarter that was reduced, but we had strong employment. Japan has had actually negative growth. In other words, it went down in size, the GDP recently, although their most recent quarter was up. The real fear is the one she was testifying about. With the drop in commodity prices, nations like Russia, Ecuador, Venezuela, and such, where their primary source of exports, their primary source of foreign capital is exports of oil, they're being hammered. And all of the banks that have lent money to these places are at risk. Similarly, there are concerns about, in particular, the shadow banking sector in China,
Now William,
I'm
sorry, just to shift gears slightly. Now, in terms of the Fed concerns, that's one thing. Now, what about U.S. voters? Data from the Pew Research Center says that most U.S. voters, they care most about the economy, and that beat out terrorism, education, and jobs. What are some of the biggest concerns that U.S. voters have when it comes to the economy?
The huge concern is that the middle class and the lower middle class have stalled. Their wages have stalled, their income on a real basis, that means adjusted for inflation, have stalled for 20 plus years. And indeed, a number of those groups, depending on the time period you picked, have actually lost. In the United States, college-educated Hispanics lost 72% of their wealth in the financial crisis on average. And college-educated blacks lost around 65% of their wealth. So there are very large sections of the American population that have either experienced no gain or have suffered catastrophic losses, and there is no sign that that is turning around. Janet Yellen, in the testimony you provided, said we're starting finally to see some wage increases, but that has been very late. So there have been very substantial productivity gains for 5 years. Those are supposed to flow through into wage increases, and they have not.